time and experience. Okay, now let us go. Let's now that moving from here, let's go into what or how or why. In fact, let's say why traders actually fail. There are several reasons. You find so many reasons online in literature, several reasons. But let's pick a few of the very common ones. Number one, a lack of knowledge. Traders enter the business constantly without a solid understanding of what the business of speculation involves. Yes, it might be a business of speculation, but there's a methodology to it. There's technical analysis to be done. There's fundamentals to be respected or to be studied. You can't just walk in and then start profiting. You see people posting their trades, making massive gains. Look, those people started long ago, not today. And in so doing, they don't post those videos with all their knowledge they have, over 8 years of knowledge they have, or 10 years in that video, so that you can quickly learn that and then also start replicating. No. You have to start from somewhere. That is, and this goes back to the very foundation that I said. To accomplish what trading is, inclusive of what? Learning and time, investing your time through time and experience. Back to this statement. Remember, this forms the very foundation of a successful trader. One who is able to do what others are unwilling to do. Pick the MACD, pick the RSI, break it down, learn it as a tool on its own, understand it. And then now see how you're going to focus that onto your charts and then get results. Again, knowledge of the market. If you don't have knowledge of the market, you are going to struggle as a trader. You will keep blowing accounts. Look, and then it gets to a point you think somebody's after you. Nobody's after you. Nobody has time for you. Because you see, the market is a big place. The market is made up of liquidity providers. It's made up of institutional traders. Then we have retail traders, you and I, who all want to make it in this life. And so it's not a place you can just walk in and then without preparation or knowledge of the industry, just start blowing up and making sure. There's a probability of people like that just walking in, placing a sell and then making gains. Yes, for short term. But overall, in the very long run, those people don't survive. They don't stay too long in the market. Without the knowledge, no. Another key thing that fails traders is leverage. They don't understand leverage. Okay, some markets don't have leverage, but FX has leverage. That is what makes one of the reasons FX is so unique. Such that you can hold $100 account and then trade it as if you're holding a $10,000 account because of leverage. What is leverage? In fact, we'll break more into leverage in subsequent videos, but let me take the time and then give us an introductory meaning to what leverage is. Leverage is simply credit. It's like a loan that your broker gives you. Okay, the broker tells you, and they quote it in percentage, they quote it in ratio terms. 1:100, 1:10, 1:50, 1:500, 1:1,000. You have brokers who even quote 1:3,000, 1:10,000 leverage. What it simply means is that for every one capital that you're holding, if I'm giving you a leverage of 1:500, it means you can trade as if you have 500 times that capital. Sadly, you ask yourself, are they giving me that money? They don't know me. They don't know my skill set. They don't know my knowledge level of the market, my expertise of the market. How come they are willing to give me this much? Two. The problem with leverage is that when that happens, when they give you that, it means that they are putting your capital at the forefront of risk on the market, such that if you have a capital of $1,000 and you are given a leverage of 1:20, it means you can trade a position as if you have $20,000 on your account. But what it means is that $20,000 plus 1,000, that is your capital, 21,000, sits on the account, and then any adverse movement in the market wipes out your capital initially. So you see, the losses start with your capital. Gains or losses start on your capital. Leverage only serves as a buffer. And so when your capital is wiped out to maybe around 200, and then you have your maintenance margin and then your required margin, the moment it gets to a point, they send you a margin call that tells you to either increase your capital or we are going to close you out with the outstanding losses you're holding. I mean, what then is the point? You should be able to tell when leverage is your friend and when it's your foe. But you get to this point when you are able to analyze the market, when you're able to understand structure. You are able to pick your demand levels correctly, you pick your supply levels as and when it is correctly, such that you master your money management, so that when you pick your trades, you're able to manage your trades efficiently. Then you can take advantage of leverage. You hone your skills, you learn your trade, you learn your craft, understand what the market is about, the tools you're deploying, understand them, know them. I mean, you cannot navigate this market without understanding your tools. Look, there are traders who, as simple as even drawing a trend line, they cannot even draw that correctly. Yet they are picking trades. It's scary. They try to draw lines to make the market behave the way they want it to. No, the market is the market. It's bigger than you. You can never control the market. The market will do what it wants to do so long as it wants to do it. All you have to do is train your eyes to be able to see what the market is trying to do and then take advantage of that. That is where the opportunities lie. As I said, no trading methodology, flying off the seat of your pants approach. You see somebody buying, you're also buying. You click buy. You don't even mind your leverage, or you don't mind your lot size, which is a key risk element in trading. The lot it can also be a friend or a foe. You should be able. Lot is just as dangerous as leverage. Look, if you don't assess and measure your risk well based on the capital you're holding, and then the kind of risk you want to accept as a trader based on capital, your days as a trader are very few. In fact, you will keep wiping accounts and you will not understand what's going on. Most traders hate to see is a chart, beautifully colored, well-colored chart, and then they just jump in. Where do I buy? Where do I sell? Where do I put my stop loss? That's all they want to know. So do I buy? Do I sell? No. Understand what's going on. What time frame are you even looking at? Is that the time? Is that to get a proper entry, you have to go to lower time frames to get sniper entries? That plays into your advantage in terms of your risk-reward ratio. No trading plan, as I've already said. You have to have a plan. And the foundation for that plan is still sitting below here. Learning how markets work is accomplished through time and experience. Don't ever forget this statement. Again, failure to apply a solid money management system. You don't manage your capital. You're holding a $200 account and you're trading 5 lots. That is insanity. That's not trading. What does that mean? Let me break that down a bit to you. For example, with a $200 account, a standard lot in general, averagely for dollar pairs, is roughly valued at $10 sensitivity. And so if you're holding $200 and you're taking a one lot trade, what it means is that anytime it goes against you by 1 pip, you lose $10. In effect, if price goes against you 20 pips, your account is gone. In one single sitting, it's just gone. And 20 pips can happen in a split second. In less than 5 minutes, price can move 20 pips, depending on the volatility on the market. What's happening? Your account can just be gone, and before you can say trade your forex trading, You've blown your first account. Your forex trading life has started on the wrong note. You are already in the loss. You're already piling up losses. Don't just take lot sizes because you see somebody taking one lot and making big money. No. Maybe the person has been practicing for a long time. Maybe the person is a seasoned trader. He understands the risk he's taking. He's calculated the risk. He knows where he's placed a stop loss, such that even if it goes against him, he can accept that loss. He knows his risk appetite. You have to determine what your risk appetite is, and this comes in your trading plan. And so, as a failing trader, obviously, you see, you won't have a trading plan, and without a trading plan, then money management goes out the window, and you keep struggling from there. Have a trading plan. Learn how to manage your money. Learn how to manage your trades. Not seeking help from experts or mentors. Not wanting to invest in an education of trading. Most newbie traders come into the market and don't see why they should go and pay for others to teach them. But rather will try to figure the market out on their own and run losses, which end up to be far greater than the cost of these training courses. By the way, which are very valuable. There are several of them out there. Highly valuable training courses that will set you in the right step and right frame of mind. Mental preparation to tell you, yes, when you take a trade, it doesn't mean it's always going to be in your favor. No, you can take a trade, it might pull back for some time and then head in your direction. So long as you have a good money management system, you know that, okay, I'm risking $50 for this trade. And so if it goes up to $35, I don't mind. I can hold because mentally I am prepared. Because I did my analysis, I have studied, I have gone through I know I have good trading education, I have good knowledge of the market. I mean, it doesn't mean it will always work out. Sure, the market might go against you once or twice, but consistently, as you go ahead, you realize that you get better and better. You're able to plot far better stops. You're able to pick far better entries. Once you are prepared, you have a mentor, you can discuss. You talk to him. I looked at this chart, Euro USD, and I'm seeing that price has pulled back, and I'm expecting a rally. I'm expecting it to move further high, to form higher highs. I want to enter here. I want to enter. He tell you no. He will teach you no. That is not where you enter. You enter on the dips. These small, you see, it protects your. It helps you. It hones your skills. It helps to protect your capital. You look for a mentor that has very good understanding of structure. I'm going to be doing a video just on the structure of markets, how to look at the market and read structure. Because at the end of the day, structure forms the very foundation of the market. And if you don't understand the foundation of the market and how it moves, you will struggle, as I keep saying. For example, take a look at this. You have a AUD/JPY pair here. It looks all over the place. It looks like there's no methodology to this chart, but then there's structure in here. For example, look at how price rallied up here and then retraced a little bit into this, forming this short-term demand level. Now look at how it goes back up, forms a higher high here. There's structure. You see, there's a methodology to the market. If you know how to look at it, you know how to chart, you know how to exploit it, navigate the chart. These are the tools. You have to be able to do this to see what's happening in the market. Look, after forming the high, it pulled back down almost into this demand level again. Let me even, okay, so it pulled down all the way back here. If you want to be specific about it, there is no one way or right way or wrong way of doing analysis. These, you won't get, it's not perfect. The market is not perfect. No, because there are so many participants. In fact, look, there are even robots EAs, algos that are also trading, just as retail traders are trading. So yes, perfection is far from the market, but there is an order. There is a certain order in the market. You need to be able to figure it out by knowing how to look at your chart and then finding out what the structure of this market is. This is the 4-hour time frame. What does this structure look like on the 1 hour time frame? Because within structure, there is structure within structure. If you look closely, you can see a pull, a drop, and then a rise here. But you see, on this time, on the higher time frames, we are looking for more absolute trend movement. And so this is a substructure within the overall structure here. Notice how price bounces off the demand level on 2 occasions, and then finally breaks through structure. Then look at what it does. After doing this, it came back to retest. There is a certain order to the market. It is not all chaos. If you can read this, if you can learn structure, this is one of the very basic blocks of trading. As an analyst, you want to analyze the markets, you have to be able to read structure. This is the structure. And you see, when you do this, then now the market is more defined. You're able to tell what's happening. Rise, drop, rise, retest, rise, breakthrough, retest, support becomes resistance, resistance becomes support. It dropped further here. We can continue for some time. It dropped further. As I said, we'll be having a full video on structure and how to place your trades and a more in-depth analysis on the structure of the market. Forming this, it came here to form a double top, and then per the rule it broke and then completed the double top, came back to retest the demand level. It became a supply level. It came back to retest. After here, there's a lot on and on and on. But before all of this, before you get here, you have to know what not to do on the market. Why others are failing, you have to know that. And then in knowing that, you have to protect yourself and then do the opposite. Moving on, no trading rules. Okay, today I saw a trade. Normally I take 1 to 4 risk reward ratio. But today this trade looks very enticing. I'm going to take 1 to 10 or 2 to 10. Stick to your rules. They are what protect you in the market. Because look, there are so many people who want to take your money. It's a zero-sum game. Okay, there are so many, they want to take your money. It's a zero-sum game. The institutional traders are manipulating the market through intelligent plays. Okay, they know the rule books that retail traders use, and so they play against them. Oh, price will not go below this level because it has come around this level and then bounced off 3 times. So I'm sure it's a very good support. I'm going to put my stop loss below there. And all of a sudden, before you know it, boom, they pick you out and then it rallies and then goes back up. No. Have a plan. Stick to your rules. Do not go and don't go for revenge trading. No. So I lost. I get upset, and so I have to also. I'll take the market. I'll take the market on and make profits, and then the market will regret. Look, the market will not regret. It doesn't even remember you. Prepare yourself mentally. If I lose a trade, I've lost it. It's gone. It's happened. So long as I have my rules and it is within my risk appetite, I'm prepared to lose $50 per trade. I'm prepared to lose $10 per trade. Because currently my capital is maybe $1,000. The goal is to survive the market for the first year as a newbie trader. And then once I have survived the market and I have learned a few tricks here or there, to be able to place trades and then make $10, $5, I grow my account to maybe $2,000 or $3,000. And then from there, I take it up from there. Have a plan. Have a set of rules. I see an opportunity. It is beyond my risk appetite. Leave it. Let it go. There are so many currency pairs. There are so many time frames. There's so much opportunity. The market will always throw out opportunities. We move on to the next one. If we didn't get this opportunity, we missed it, we move to the next one. Look, there are times you can even pick a trade and then price will come so close to your entry, it will miss your entry by a pip. Don't dwell on it. Move on. So what? It happened. What are you going to do? Don't chase the market. Let the market come to you. And you can do this when you know and understand, you appreciate structure. Let's go back to the chart. Let me do a demonstration as to what I mean by that. For example, we know that once there was a break, we're expecting what? A retest of the level, because now that support was no more, we are expecting the retest to see support becomes resistance. And so I will not come and then be selling here. I won't come and then be selling in this zone here because I'm chasing the market and then it has broken through, and so I have to also sell. No, you don't. If you don't take time, you end up selling here. It will come back, retest, and then drop because you missed here. So wait, be patient. Price has a definite price, or the market has a definite behavior. It has a certain price action to it, and it will definitely retest. I mean, there are times it will not retest. It will just break through and then keep going. Don't chase it. Let it go. Look out for other setups. Do your analysis. Wait patiently. When your entries trigger, take it easy. Look at what's happening. Make sure you understand. This market is on the 4 hour. It looks like it is dropping, but maybe on a higher time frame, it is showing a different overview or outlook altogether. Understand inter-time frame analysis. Make sure your coach, your mentor will guide you. This is where you need the mentor, because you see, as a newbie trader, you can't learn all these things by yourself. It will take you time, and it will cost you money that you will learn, you hard-earned money. Most newbie traders, you find them altering their sound trading plan. They have a very simple trading plan, but because they see somebody's chart with so many colors, with so many lines, so many tools, so many indicators deployed, oh no, then I might not be doing it right. This guy is more technically gifted. Let me try and then copy his. No, that is not how the market works. So long as you do what you can resonate with, what you understand, it's one day at a time. He didn't get to that level of chatting in a single day. You're new. Take it easy. I mean, there are those that come in and make billions in a day. I mean, millions they make it big, to exaggerate a bit. But the majority, it takes time to grow yourself mentally, prepare yourself for success in this market. It will take you time. And a lot of learning, charting hours. Make sure you have a lot of that in your belt, under your belt. And one important thing, back testing. If you have a strategy and you think the strategy is great, back test it. It will tell you how the strategy would have played out in the past. It will give you some clues as to what not to do with your strategy, and then it helps you to better mold your strategy for the upcoming future. I've already mentioned this random trading, which is trading anything outside of your trading plan, and is unusual usually emotion based. Yes, emotion based trading. You're having a problem at home. You that is not the time to trade. Emotionally, you are not sound. Random trading, anybody's chart, any signal you see, oh, this guy is very good. He gives very good signals, and so then you just jump in and then you're picking his signals. Really? Which experts told you? Who validated him? No. Let him show you his trading activity for the past year, for the past 2 years. What has he been doing? If you look at my channel, you see I keep posting trading activity from as far back as 2017. Consistency. It is not to brag or to show off. No, it is to show that I have been in this market for more than 8 years. And even with that, it took me a long time to gather a lot of experience and then knowledge to get to where I am. I mean, even with this, I'm still learning every day. I have a learning plan such that every week I have to pick one key element of the market and then learn it. I download a lot of PDFs, books, specialized books on Fibonacci, pattern trading. I paid for courses. I learned them. So many courses. I learned several of the things I know. I learned a majority of them. A further majority too. I learned for myself, from experience, and then charting what a divergence is, how to trade a divergence. Don't just trade randomly. After all, if you have a trading plan, you don't trade randomly. And you don't become emotional. I lost $100. Why? What happened? I'm going to show the market. Really? The market is bigger than you and I. Be disciplined. Be disciplined. If it didn't come into your entry level, it didn't come into your zone, leave it, let it go. I have a target for the day. If I lose $30 today, I have to stop. I have to revise my notes. Make sure I prepare for the following day. Whatever else is left for this day that I have lost, once I have gone beyond my limit of $30, disciplined enough to know that I have stopped trading. I have closed for the day. Oh no, it's just $30. Let me increase my lot size and see if I can pick. I'm seeing a somewhat double top forming. Let me see if I can quickly pick it. No, that is not discipline. Be disciplined in your doing. You lost $30 today, you're done. You close. Whatever else is left with is continuing education. You sit and then you learn. Look at the chart. Take a book. Find something to read. Understand that today I have closed for the day. Because per my limit, I have hit my limit. Give yourself a fighting chance in the market. Give yourself a fighting chance. Learn from your mistakes. Learn from your mistakes. Not most traders who fail, they don't learn from their mistakes, from their previous mistakes. That's a recipe for disaster. I took this trade, I lost. Why? What didn't work out for me in this particular trade? That is what you want to know. That is the most important thing. Anyway, thank you. Okay. So we'll be as I said, there are so many reasons why traders fail. Lack of commitment to the process. You see, you don't commit yourself. You keep procrastinating. You keep postponing your charting time. You don't commit yourself to find out what is the candlesticks. How many candlesticks are there? What does it mean when it says it's a reversal candle? Does it mean that if anywhere on the chart it forms, it's quickly a reversal? No. If it forms at a key level, then the probability that it's a reversal and it's not a fake out, it's very high. You don't commit yourself. Sit down and then learn. You see, I keep talking about learning, because if you don't understand this market, if you don't have the knowledge, you only develop the skill set if you invest yourself into understanding your tools that you're going to be working with. I mean, you get to a point where you have charting, you chart every day to the extent that if for a single day you've not looked at the charts, you keep wondering what's going on the market. 2 days ago, I saw Euro USD form this particular pattern, or I saw Euro hit this level. I was expecting to drop. What's going on? Have a curious mind. RSI hits 70%. It means it's overbought. On the time frame, on the respective time frame, if it hits 30%, it means it's over. What does that mean? Why 70? Why 30? Who even developed the RSI? Who came up with the RSI? What did it mean to the person? Why did the person develop RSI? The relative strength index. What does it mean? I mean, by name, it is telling you that it's looking at the strength of one currency in relation to another. Is that all? I mean, YouTube is a fantastic place to get a lot of introductory knowledge. Yes. But beyond that, you have to sit back and then dive deep. And this is what a majority, 99% of traders don't do. Hence their failure. The 1% that take their time to understand the market, they sit back, they grow slowly. But they grow, and when they pick their positions, you realize that they have actually learned something. They know the market. They don't just go in. Look, it doesn't mean you have to be picking trades every day. No. There are traders that I know that pick trades once in a month. They are not in a hurry because you see they want to take their time and assimilate the knowledge they have gathered. How does this fit into my trading plan? You don't just pick something from outside and then just bring it into your trading life and then I'm just trading. No. I've been using MACD, I've been using RSI, but I realize this guy's using the awesome oscillator. Why? No, you don't find out. What makes it better than mine? Because it looks like he's making profits with that. No. Live it, learn it, love it. Pick the oscillator, find out what it does. Come onto YouTube, look at a few videos, introductory videos, and then go back and sit down, find a PDF that has in-depth knowledge about the subject matter or the indicator, and then use it, learn it, understand before you even pick it. And when you even pick it, as you pick it, back test it to be sure that the knowledge you've acquired on it is actually correct. It is actually efficient enough. Commit yourself to the trading process. Commit yourself. And then another big reason why most traders, especially newbie traders, fail. I mean, this particular reason, even certain advanced traders who have advanced in the market, who have been in the market for so long, even fall foul of this. They don't use stop losses. And as you can read, it turns out to be the number one reason why traders lose money. They lose. Look, why won't you use a stop loss? If you have a trading plan and then you've decided that per trade I'm going to lose $10, then you have to have a stop loss by default. Anyway, let's go back to the chart. So I decided that I'm going to pick this trade here. I'm going to sell from here. And I won't put a stop loss. Or I'm going to sell from here. And I won't put a stop loss. I want to sell, I won't put a stop loss. Then boom. The market changes its mind. It didn't drop anymore. It goes through to go and then test this trend line. It goes just to test it. You're already in the loss. Once it tests, it broke through and then found support. And then it's on its way up. You're finished. You end up spending the rest of your trading life trying to recover losses because you refused to put stop loss. It literally means stop the loss. I am okay with this amount of loss. This is where my risk appetite is, my risk tolerance. This is where it sits. And then finally blaming everybody by yourself. Oh no, I think the indicator doesn't work well. This indicator is a bad indicator. It doesn't work well. I think instead of showing me an up, it showed me a down trend. Instead of giving me a good entry, it gave me a bad entry. No, the guy's analysis was wrong. He didn't even explain. I should have. My broker is trading. Number one, my broker is trading against me. No. Yes, of course, there are brokers that do that. In fact, in subsequent videos, I'm going to be expatiating or lecturing on how to even pick your broker. But you first have to have a trade plan. You first have to learn. You first have to understand what the market is all about. And then you can start thinking about picking a broker. Blame. There is no blame game in the market. If it goes well for you, it is your trade. If it doesn't, it is still your trade. Take responsibility for your actions and inactions, more importantly. Enough said about why traders fail. Let's talk about how to be a successful trader. And then wrap up this lecture. Obviously, the reasons why traders fail, the opposite of these